Welcome to The Explainer. Today, we're jumping into the new world of personal finance. It's a place where, honestly, viral TikTok trends feel just as important as those timeless investing rules. So, how do you even begin to navigate all that? Well, let's map it out together. Okay, so to get a handle on where finance is going, we first have to understand the modern money mindset. It's this wild mix of real anxiety about the future, but also this wave of incredible creativity in how we're all talking about and managing our money. And it kind of kicks off with a feeling I bet a lot of us have had. When the future feels really uncertain, there's this urge to make yourself feel better with a purchase. It's even got a name now, doom spending, right? It's that moment when buying something new feels like the only thing that'll fix a bad day, even when you know it's probably not the smartest move for your bank account. But here's the cool thing. All that anxiety, it has also sparked this really powerful counter movement. Just like The Guardian points out here, a whole generation is taking back control of the conversation. They're literally inventing their own language to talk about money in a way that just feels more real, more authentic to them. And a perfect example of this is a little something called loud budgeting. I mean, it is the polar opposite of doom spending. Instead of, being quiet about your financial limits, you just announce them proudly. It turns saving money from something to be ashamed of into a total flex. It's not about saying, I can't afford it anymore. Now it's, I don't want to spend. And this number right here, this really gets to the heart of why all these trends are happening. A recent survey found that almost a quarter of young adults, from 18 to 24, straight up believe they will never be able to retire. I mean, when you're looking at a future like that, it makes total sense why the old school rules of finance feel, well, kind of broken. And it's why these new approaches are bubbling up. Okay, so we've got the mindset down. Now let's pivot and talk about action. What can you actually do? We're going to start with two of the biggest hurdles for so many people: getting a handle on debt, and then making those very first investments. All right, first up, if you're dealing with debt, there's a strategy that has absolutely blown up online and for a really good reason. It's called the debt snowball method, and its secret sauce is all about building momentum. So here's the game plan. First, you list out all your debts, not by interest rate, but from the smallest balance to the largest. You keep making the minimum payments on everything, except for that little one at the top. You throw every single spare dollar you have at that smallest debt until, poof, it's gone. Then you take all the money you were paying on that first debt and you snowball it, adding it to the payment for the next one on the list. Now, the real magic of this method isn't the math, it's the psychology. Seriously, paying off your highest interest debt first might save you a little more money in the long run, sure. But the snowball method is designed to motivate you. You get these quick early wins that make you feel like you're actually making progress, which gives you the fuel to keep going. And once you're ready to invest, hey, you don't need a fortune to get started. There's a popular plan out there for what to do with your first $500, and it's all about balancing safety with growth. So maybe $150 goes into a high-yield savings account for a little emergency fund. Then $250 goes into a broad market ETF, maybe one that tracks the S&P 500. So you own a tiny piece of 500 of the biggest companies. And that last 100, that's your fun money. Go explore a stock you believe in, or maybe even a little bit of crypto. With all the information swirling around out there, all the viral hacks and super complicated strategies, what if I told you that the most important financial advice in the world could fit right on a single index card? Well, guess what? It can. This amazing idea from author Harold Pollack just proves that personal finance doesn't have to be some big, scary, complicated thing. It really just boils down to a handful of super powerful, timeless rules. Things like saving a decent chunk of your income, and this is a big one, paying off your credit card in full every single month. The whole point is to just focus on these big wins. If you get these things right, you are building an incredibly strong foundation for your future. Now, one of the most important rules on that card, and one a lot of people just don't know about, is the fiduciary standard. All it means is that any financial advisor you work with is legally and ethically required to put your best interest first, not their own. It's a game changer, so you should always ask them, are you a fiduciary? All right, we've got the rules of the road. Now, let's check out the actual tools that modern investors are using to put those rules into practice and start building some real wealth. So a huge one in any modern investor's toolkit is the ETF, which stands for Exchange Traded Fund. Think of it like a hybrid. It's the best of both worlds. Like a mutual fund, it gives you awesome diversification. You're buying a whole basket of stocks all at once. But like a stock, you can buy and sell it anytime the market's open, which gives you a ton more flexibility. And this is where it gets really mind-blowing. This is the power you unlock when you combine these tools with just plain old consistency. Check this out. By investing just $400 a month into an ETF that focuses on high dividend stocks, the magic of compounding over 30 years could potentially spit out over $8,500 a month in passive income. It's just an incredible testament to long-term steady investing. Now, beyond stocks and ETFs, a lot of savvy investors also look for assets that act as a store of value, something to protect them against inflation. And this slide is just a powerful example. A $100 bill from a century ago is worth less today because of inflation. But if you had taken that same $100 and bought gold with it, today it would be worth around 10,000 bucks. It just shows how certain assets can really help preserve your wealth over time.
So you might be wondering, where is all this new financial advice actually coming from? Well, it's not always from the traditional Wall Street analysts in suits anymore. Let's talk about the rise of the finfluencer.
Yeah, finfluencers. These are the content creators out there teaching millions of millennials and Gen Z everything from the basics of budgeting to the really complex stuff, like dividend investing. They've made financial education accessible and, let's be honest, a whole lot more interesting.
But, and this is a really big but, with this new wave of advice, you absolutely have to be smart about who you're listening to. The best creators, they're transparent. They share their wins, but they also share their losses. They focus on proven, long-term strategies, not some get-rich-quick scheme. And maybe, most importantly, they are always upfront about the risks involved with any kind of investment.
So here we are, after this whole journey through the new landscape of money, from doom spending all the way to dividend ETFs. The single most important question is the one you have to ask yourself. In a world with endless advice coming at you from every direction, what's the one simple rule that's going to go on your index card?